All right, hey there, everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time. Here on Tuesday, the 14th of September, maybe about halfway through the month so far, 2021, from beautiful and sunny today, Bernie, Texas. Great to have y'all checking in. Guys, let me get these glasses off for me. I need to. Still trying to get used to them, guys. I don't know how y'all do it, but I'm trying. So man, hopefully y'all are doing all right. Who's here already? We've got Oscar. What's up, man? He says SEC live stream just ended. Chris starts his. Yeah, I didn't even get a chance to watch that. I've been so busy this morning. It's been crazy. For those of you that don't know, I launched a weekly newsletter that went out. The first issue went out yesterday. So if that's something that you're interested in, man, jump on it. I just take a look, a macro look, kind of like what I do on here. But I think I am able to give it a little bit more. I don't know. Sometimes reading things kind of help you digest all that information. So hopefully that's helping. I started with the reverse repo, dollar liquidity, things that are going on right now with the Treasury, stuff like that, to kind of give you an idea of the environment that we're trading in and why. You need to get off all that social media nonsense. Most of the people there, guys, don't have a clue what they're talking about. I tend to point out a few of them that I think have got a pretty good grip on things, for you guys to follow. But you have to understand those people are often not appreciated by the general market because their views are opposite of what everybody else wants to do, When you get, as I continue to remind you, when you get toward especially more macro tops in markets, everybody from your guy that just started yesterday trading to the guy that's been doing it for 50 years, all of a sudden everybody is bullish, right? I mean, it's like almost the entire swath of the market is bullish. For those of you that were around during 2007 going into 2008 when we had, Lehman and the great financial crisis and all that, you'll remember how everybody was bullish as heck, right? Very few people taking the other side of it. Very few people kind of, paying attention. And the good thing about some of these guys that I point you guys out to is that they do a lot of, explaining whatever, help you understand, kind of like what I do with what's going on with things, what you see in social media and those things that you personally most likely take for granted as truth really aren't true, right? This whole idea of inflation, well, what is inflation exactly? How does it really happen? Just because the Fed's balance sheet goes up, does that mean that inflation is taking over? Inflation really is just a increase or decrease in the money supply. Prices don't inflate. They don't expand, they rise and they fall. But it's something that economists have really kind of thrown in there over the last, few decades. And I think it muddies the water a lot for understanding, especially if you're a layman, if you're not really into economics, for understanding what's going on. And it's just another way for especially governments to kind of get in there and label things as they want them to be labeled so that you think there's something that maybe they're not really. So the government can, and the Fed and everything can kind of do what it needs to do. But I digress on that. Anyway, that's there in the newsletter. We put out some, we take a look at the different parts of the market this week. I took a look at the large, the macro oil chart. We made a mention about gold and something that happened back in August. And maybe it's letting us know that there's stress in the system right now. You have to understand when QE gets... the problem with QE is it's this artificial injection into the system, guys, okay? And it doesn't actually flood into the system. It sticks around. That QE money sticks around with the Fed and with your primary dealers, which means that, it goes there between the Fed, the primary dealers, the banks, the money markets, that group. It doesn't actually enter into the broader market, right? It's for you and me. And so... when you have all that Fed liquidity coming in there, there's nowhere for all that money to go at those levels, right? I mean, the only way you can really do it is the banks can lend. There's two ways the banks can do this. They can lend or they can, use what the Fed has now, this permanent reverse repo facility. Well, the problem is all this money's going into the RPP there, that reverse repo, and they're not actually lending it out, not to the degree it needs to be. Year over year, lending is significantly down, as I pointed out in the newsletter, right? And so you've got all this appearance of cash, I guess, of fiat, in this particular segment of the economy, which isn't you and me. It's again, it's your primary dealers, your banks, your money market, stuff like that. And really, it's just used. What's going on is it's sitting out there. It's not doing anything. So the Fed opens up the reverse repo, so that way that these guys can stick that money in there overnight, and they get treasuries in return. They get this tiny little interest. And the whole goal of this is to kind of set a temporary floor, or hopefully not a temporary floor. They're trying to set a floor on short-term rates. It's the Fed's way of trying to control the front end of the yield curve, right? Because if not, with all this money in these particular hands, interest rates are going to need to drop. So if the Fed can set a floor in it with the reverse repo and say we're going to pay this much, down to 0% on cash, then it gives them somewhere to park that cash overnight, and they can get tiny little bit of interest on it. The big thing for commercial banks, is that when you put your loans in there on deposit there with the commercial banks, and they're it's an interest bearing deposit, by law they have to pay you that interest, right? And again, so the only way they can do that is to loan out, or to do this thing with treasuries, right? Which is what you're doing with the reverse repo. You're getting that pristine collateral. That's the treasuries. And so, that's kind of where they're doing. But the problem then becomes we've got this debt ceiling with Congress right now. So the amount of treasuries out there is very limited. So now you've got a limit on the amount of treasuries that are out there, and a ton of cash that needs to get a hold of that. And so guess what? It causes a liquidity problem, guys. It causes a liquidity problem. So anyway, I go into all that there and talk about that. And of course, some trade setups. We threw a couple of them in there this week. So we'll do that every week. We'll throw in a couple, whether they be crypto or stocks or commodities or metals or futures markets or something like that. So anyway, a lot of that going in there. Financial term of the week, all that fun stuff. All right. It gives you by the way, it also has my streaming schedule public, and for tier 3 in there as well. And right now, there's a special in there for tier 3, so jump on it. Subscribe to it. By the way, you can subscribe to it. Let me see here. Where is my subscription? Right here. I'll throw this link in here for you guys, so you can see this here. You can click on that link there, copy and paste in your browser, and then you can get signed up for the market breakdown, which is what the newsletter is called. All right. Anyway, so lots of stuff going on there, guys. I guess what I'm just trying to say is this: when you're in social media, everybody's like, "Oh, it's inflation, right?" And hyperinflation is coming, all stupid stuff, right? And really, guys, I'm not going to be kind about it. It's just stupid. But it doesn't mean you're stupid. It means you've been told now, so it's up to you to go out there and either listen to me or go out there and figure out on your own, what's really going on. It's completely up to you guys. You either sit here and you knowingly sit in a false narrative, or you go out there and you correct it. It's kind of what separates the winners from the losers in life, right? Those who are willing to seek out more information, to get confirmations on things that they believe, or non-confirmations on it and whatnot, so that way they can always be striving to find that truth in everything. That's how you get ahead in life, guys. If you sit there closed-minded, thinking, especially in something that you're new at, something that you're not consistently profitable for years at, that lack of humbleness is going to cost you a lot of money. It really is. A lot of happiness if it's outside of, financial markets. So just some thoughts on that, guys. All right. Anyway, you can join us here at howtotradetowin.com. We'd love to have you there. Tier 3, we've got 3 tiers, but tier 3 is where it's at. That includes all that, well over 110, 120 hours of video education now. Grows every week. 3 live streams. Monday, we do the Wyckoff method. Wednesdays, we do tips, tricks, and techniques. And then Thursdays, we do Elliott Wave, and we just apply all this to charts to get from that theory to application. Chart requests, chart critiques, everything, man. Come on over here, check it out. Like I said, you can sign up for a a special there, a 3-day trial through the newsletter there. Okay, you get a 3. We've never done it before. A 3-day free trial of Tier 3, and all it is it will renew at the normal price there after the 3 days. So all you have to do is cancel prior to that. So again, it's all on you what you want to do, right? So there we go. Let me see. Man, I can't believe we're doing that. First time ever. Let me see here. Jared the Great, what's up, man? Brian Riley says, sold Litecoin yesterday at $229 before it crashed $50. Oh, man, yeah, that was a good one, wasn't it? Man, I think that hit, didn't that hit my target? I think it did. It just had that quick, like right up and then drop right back down. So that was definitely worthy of trade there. Let me see here. Telluride, what's going on, man? Hope your power and internet stays on for the stream today. What are you trying to say, man? Is it not going to? Is there something I don't know about? It's a nice sunny day over here. I don't know. Maybe the power grid will go down again. Jeez, stupid. Or nearly anyway. Rolling blackouts. I don't know. Hobby, what's up, man? It's RE3. Good to see you, buddy. Data's here. ARM. Droid Doctor. Let's see. Cue the action. Peter, what's up, man? Good to see you guys checking in. Hank is here. He says, hello, fellow gamblers. Traders. But we're not gambling, right, folks? I mean, that's what you don't want to do. I'm telling you right now, if you want to gamble, go to Vegas. Go somewhere like that where you can get a show, you can get drinks, you can have a good time. If you do well, not only do you do well, but you get comped tickets to things. Maybe you get a nice penthouse. You're not going to get any of that if you do well, gambling and crypto. You just, make a little money. So if you want to gamble, my suggestion is always to go there, make it a time, have some fun. But if you're serious about trading, hopefully that's why you're here, and we can help you out a bit. Hey there, Diego. Good to see you, buddy. Hope you're feeling well, man. Oscar says the S4 and S5 daily pivots for Evergrand are negative. Yeah, Evergrand just keeps on ever going down lower, right? But they did say that they were going to pay everybody back. I mean, that's what they said. We'll see if it happens. But, they're going down. Stock market over here in the U.S. is going down. They're significant, man. They're significant if they're going down there. So we'll see what happens with all of this. Let me see here. Hey, some risk. What's up, man? Good to see you. My buddy Bill checking in. Andrew, what's up, man? Esteban, love to see you here, man. Mark is here as well. Mike Kane, he says link didn't work. The link didn't work for the for that? I just clicked on it. It worked. The other way to do it is go to my my Twitter profile. Let me see here. / TX West Capital. So you can go to that, and right there at the bottom underneath the bio info is a link to that to get logged in on that. I don't know. Like I said, I clicked it. It worked for me just now. I just clicked it just now, so I'm not sure what's going on there. But you can get to it, like I said, directly from my Twitter profile page there. Let me see here. Nevlusian, what's going on? Oh, tell you right, you was talking about the hurricane that took out 500,000 customers near Galveston. Yeah. Yeah, we've got that. I've got some friends over there in the Houston area who are enjoying all that rain. Got some friends down in Corpus Christi as well. But yeah. I think we'll be fine. Hopefully we'll get some rain over here. That's what I'm hoping for. We'll see what happens with it, though. Joseph Johnson, what's up, man? Good to see you here. Hank says, according to the EU, leveraging cryptocurrency bets is gambling. Yeah, I know. They're all in cahoots, right? By the way, guys, let me say something real quick about the SEC and these other governmental types, agencies and whatnot. Listen, you can sit here and you can step up, go, it's not fair, and pound your fist on the wall and throw a temper tantrum and all this stuff. But, really, it doesn't accomplish anything. It behooves you as traders in this market to understand, to do your best to understand what the law is and what they're trying to do. Because regardless of whether you agree with them or not, they've got the power to do whatever they're going to try and do. And you're throwing a temper tantrum isn't going to stop them. So figure out what's going on and how it works and everything else so that you can learn to prepare yourself for whatever may come. All right? No, nobody's going to remember you crying, into your spilled milk, when if they were to go and say, oh, you can't trade it anymore. But that's also the basis if you want to develop some grassroots kind of fight against what they want to do. But all I see online, guys, I see a lot of people crying and complaining, oh, the SEC's antiquated, the SEC laws are terrible, and they weren't built for this and all this. So what? You waste so much time reading nonsense like that. Who cares? What is your solution? What are you doing to change that? And guys, this is not just in trading and what's going on here. This is in life. In life, people get out there and they whine and they moan and they complain. But that's all it is. It's a waste of time for anybody else listening to you. Make your time valuable to them. Come up with, and especially when it comes to work, your boss doesn't want to hear, oh, this issue, that issue, whatever. They want you to tell them, okay, well, this is how I'm going to address this. This is how I'm going to fix it. This is life, guys. Life does not just, it doesn't just do what you want it to do. It happens regardless. Make the best use of it. So coming back into financial markets here, stop with all the belly aching and whatever about it. It is what it is, guys. Figure out how to deal with it. Come up with solutions. The belly aching is just a waste of space. It's a waste of energy, right? Not just your energy, but it's a waste of energy on the internet, the energy the internet uses, your computers and everything else, to post all that nonsense online. And I know it sounds kind of harsh the way I'm saying it, but it's meant to really get your attention about, again, guys, I'm a firm believer that how you act and react and view life is how you're going to look at the markets. And if you continue to argue out there and blow off all this wasted energy on nonsense like that, it means you're not being productive in your trading. And that if you're serious about trading as a lifestyle, guys, you've got to get serious about it. I see so many people that say, oh, I want to be a trader, but nobody wants to put in the dang work. Nobody wants to do the things they need to do to become traders. What? The education's going to take an hour? I ain't got time for that. I'm going to go binge watch Netflix for 4 hours. What? You mean I have to actually practice? I ain't got time to practice. This should just happen right away for me. It's unfair. Don't be those people, guys. It's not going to happen for you. You have to make it happen, but you have to believe you can make it happen, okay? So just some thoughts there. Leighton, what's up, man? Wet London today? Like I said, hopefully we'll get some of that rain from the tropical storm there that hit the coast a few hours away from us. We'll see what happens. Let me kind of catch up with you here, guys. Kimozabi, what's up, man? I see you there. Let's see. Hank says, and Binance seems to agree about what he said earlier. But they say it's a skill like poker or baccarat. Trading's a skill, sure. But I don't understand how they can say it's gambling, but it's a skill. I don't know. I guess it becomes nuances in words, right? What does gambling mean? Is what it is. Let me see here. Who else is here? Chris Baker, what's up, man? Oh, Mike, it worked when you clicked, but not when you copied it. Oh, okay, got you, man, got you. Glad it worked, buddy. Glad it worked. Hank says the end of leverage is nigh. Yeah, I think we're gonna have a reckoning at some point here. Things have been so over leveraged, guys. I've shown you charts over the last few months where we've looked at the significant increase in leverage, basically since the mid 90s area to now, and how it's just completely separated from everything else, right? There's going to be a reckoning, guys. Maybe it doesn't come today or tomorrow, but there's going to be one. And it's probably closer than it's not. And so, that doesn't mean that you can't trade, but you have to be aware of what's potentially going on. So that way you can trade it intelligently. You don't sit here like these other people and believe that stocks are going to go up forever and, nothing ever comes down and all this other nonsense. Which I guess we'll take a look here at the stocks today as well. Kind of seeing those indexes dropping some more, right? Indexes dropping. USDCAD popping, man. Holy crud. Have you guys been following me on Twitter with USDCAD? Racked up almost $1,000 on, Friday? And then I mentioned, and I got out a little bit early with that. I mean, I knew it was going to push into the end of the day, but man, it just continued pushing like 20 or 30 extra pips. And then, you know, I mentioned, somebody had asked a question about it, and I mentioned that I believed the top was probably there, was going to pull back this week, you know, at market open. We got that pullback into this morning, finished it off, tweezer bottoms, and I went long there at, I posted the image there on Twitter, but I went long at 1.26076. Let me see here. And the low was 1.26013. So I was about 6 pips off that low when I went long. I'm about 47 pips up right now. I think I was up around 65, 70 pips maybe. But, you know, this just being, I expect this just to be a pullback and then head up further. So we'll see if we can get that. But nonetheless, up significantly again. So pretty much, man, I've been nailing this USDCAD for quite a while. This summer, guys, this summer. I've been posting a lot of trades on there. So hopefully you guys have made some money with it as well. I think it's been the best pair to trade right now as far as USD goes. So we'll see how the rest of that. We'll take a look at the DXY here in just a minute, and we'll see how that's all going there as well. Blaze, what's up, man? Finally someone who gets it. I hope you're talking about me. I've been doing this a very, very long time. I'm often not with the crowd, you know, at the points where you need not to be with the crowd, and that means my following is usually much smaller, which is all right, guys? We make that money trading. That's what we do. Let me see here. Let me see anything else you guys got going on here. Leighton says, what's your opinion on Evergrand over in China? Could have massive global repercussions on the markets? Yes, exactly. Yeah. I think there's quite a big possibility there. All right. It's so large. There's so much debt that it owes, right? That you know, there's a lot of large other companies, you know, in it, you know, into its bonds there, and so, you know, its failure to pay those back, or the fear of its failure to pay that back, could cause ripple effects throughout the rest of the global economy. And remember, guys, as much as you may hate the U.S., you know, if you're not here, or even if you are here, and, you know, in all this idea of, oh, the U.S. thinks they're so big, we'd be fine if we didn't have them. You know, the reality of it is, guys, and this isn't, I'm not just saying this because I'm here in the U.S., but the reality of it is a significant portion of the world debt is denominated in dollars. Oil is denominated in dollars, right? You know, these things that make the world go round in this interconnected global financial system are all based on the dollar, more or less. Now, China's trying to do its thing, and it's trying to, you know, supersede the U.S., but that's nothing that's going to happen overnight. If it ever did happen, it's going to take a while. And they've got their own issues they're dealing with, you know, right now. If you guys, again, Evergrand, and other things that are going on with their stock market and things over there. So, I mean, again, guys, it's like that whole posturing nonsense with the SEC. You know, you have to be real. You have to be realistic about what's going on and what these things that you're watching, how they play into, you know, everything that determines what you're doing. Because if Evergrande, let's say Evergrande collapses completely, can't pay back anybody, all these other companies are now going to be affected by it. You've already got the economy on this very tip-top teetering edge here. I mean, everything could go down. And if it goes down, guys, if you're an investor, it sucks. If you're a trader, man, it's money. And I think that's the one thing a lot of y'all need to understand as well is, you know, there is a difference between investing and trading. A lot of y'all talk about trading, but you react as investors, right? So you get upset if price is going down. But as traders, we don't care about the direction. We just care that price is moving because we can short and we can long. It's a day at the office, right? So make sure you guys understand that and you recognize that self, that within yourself. So that way you don't have these big negative emotional reactions to what's going on. All right. But if you are investors, you should be careful. I mean, the very fact, and it's hard, it's so hard it always is for new traders to understand because they come in at the tops of markets within the last, the last year or two of the market coming up to top there, and they think nothing could ever go wrong. It's going to go on forever. I want to be so freaking rich. and then the market slaps them in the face, says, you thought. You know, and it goes the other way. And this happens every cycle, guys. Every time price heads up there. The only difference I think we're seeing now between, you know, more so than 2008, more so than 2000 with the dot-com bubble, more so than 1987, is more something along the lines of, again, you know, 1929. You know, the end of this credit bubble, the everything bubble. If it's the end of that, 233-year cycle, something like that, the downside is significant. Again, if you're investing, there's a lot of money to be lost, right? If you're trading, there's a ton of money to be made. All right? So just keep that in mind, guys. Just keep that in mind. I think our membership actually rises more during bear markets than it does during bull markets. Bull markets, everybody thinks they know what they're doing. Everybody's a genius, right? Bear markets, people are proven wrong time and time again. And I think we might even see that coming up, you know, if we get this playing out here for this next one. So we'll see, right? Mark, you said, I made your salary for the month in 2 days. I love that, man. Which trade was that? Let me know. Let me know. Adam, what's going on, man? Good to see you checking in. Ace and Risk says Queen's Gambit was worth the 4 hours. I haven't seen it yet. I'm like, period movies I'm really iffy about. I don't have a good track record with those. But since you said that, man, and I trust you, I may actually see if I can find some time to watch that this weekend. BlockTech, good to see you, man. Let me see here. Telluride says China now demolishing skyscrapers that never sold. Ghost cities. Yeah, China's real big. If you guys haven't been paying attention, they got a lot of those ghost cities, man, where they've got just these completely, you know, completed cities where nobody's living. And then they've got multiples of them. And some of those cities they've designed to look like, you know, Paris or Italy or whatever. It's really crazy. It's really crazy. Let me see here. Oscar says 1.5 million people who paid for their apartments trusted Evergrand. Let me see here. Oh, it was the USDCAD trademark? Oh, man, yeah, that was great. Man, I don't know, guys. You know, with what I do, you know, you get the yahoos online who don't have anything better to do with their time than try to cause issues. And, you know, and they'll call anybody out there a LARPer. Oh, it don't make no money, blah, blah, blah. And so every once in a while, I'll do like I've done this summer. You know, every once in a while I'll go on this thing where I'll post trade after trade after trade, just to shut them up for a while. But they always come back. They always come back. But if you guys are watching, you can chime in and say, no, I saw he made money. Again and again and again. It's good times, right? Because online, you know, social media can be such a cesspool. I have to admit, I've met some really great people. Many of y'all, you know, I've talked to quite a bit. And I love that part of it, but man, it can be such a cesspool, right? Let me see here. Let's see here. Mark says best parts, he's Canadian. Oh, on the USD-CAD trade? Right? Let's see here. Chris is a typical American. He classes the 1950s in a period trauma. Is a period trauma? Yeah, you know, it is. It is. It was a period of time. There we go, right? Anyway, so let's go ahead and jump on here, guys. Like I said, you can join us at howtotradetowin.com. We'd love to have you there. I wanted to show you this. So this is something that I had posted for you guys. Oh gosh, I guess it would have been back here a month ago some point, right? Maybe because of this right here, this 1, 2, 3, 4, 5. Then maybe we have a 1, 2, 3, 4, and then an ending diagonal here for a 5. And then a flat correction. So ABC down, ABC up, and then 5 down. And so it came pretty close, as you can see. It came pretty close to where I had it. So wave B will kind of pop on over there. Wave C will just pull on right over here. So if the bottom is in, if it is in, which I'm telling you guys, I don't know for sure what's going on here. But I've discussed the volume and price action almost daily, I guess, with Discord. And if it is in, I think it would potentially be that this would be the situation. That this would be a 1 and a 2 as a flat, and then we're breaking out. And if that's the case here, just looking at this this really clean, quick chart here, That would give us... Whoops, where'd it go? Don't you guys love it when the old people say that? Whoops, where'd it go? Yeah, I'm old. Let me see here. So that would give us a wave 3 up here at around 73,431. Let's see here, 73,431. Nope. Oh, wait, I'm sorry, 74,341. All right, guys. 74,341. Yeah, right up in that area. That would be the wave 3 on that. And that would give us a minimum wave 5 up here at around 82,000. But again, I'm thinking, I don't think that would be the end. I think that would be like wave 1 of 5, potentially. That or wave 5 or wave, and or wave 3 will overextend and push us higher. I really think we'll probably, as long as we break out above the swing high there around 64, 65,000, that all-time high, I really think there's a good chance we're going to see 6 figures just because traders are going to be trying to get there. That's going to be on their mind. Now, if it blasts on through there, because remember, this is all price discovery above 65, right? I think there's a good chance we could see a strong overextension, and hit further up. But for right now, we'll wait and see what happens. Again, we've got to get above that this all-time high up here first, right? Let me see here. Oh, let me see here. Just kind of catchy here. There's some issues with the image quality. Make sure you guys are clicking on that little gear icon on the bottom right-hand side of the screen there of the projector, the player, and make sure it's not on auto. Put it on the highest setting there and see if that works. I'm not getting any issues on my end here. I'm getting no issues at all. Everything's pushing through perfectly. So it might be something like that happening with the YouTube and Twitch and whatever. So sorry about that, guys. I wish I could do something about it. So yeah, anyway, I just want to kind of show you this because this was that thing I'd drawn out here back almost a month ago here as we completed this possible thing here. Yeah, it would have been right around this area, right around the beginning of August, mid-August. It's about a month ago. So that's an idea, if it's going to get up there. By the way, also notice, this is the daily. Notice that price is finding support on that daily right there, right? And it continues to find support, and now it's trying, this daily candle is looking pretty good so far. Trying to break itself up higher, right? So it's possible right here, kind of like we had right here, we've got a flat correction going on here with this 1, 2, and 3 popping up. And so if we look locally there, then if that's the case, locally here, this might be a 1, 2, let's make this in the micro here. Okay. And so that would give us a 3 right here, which makes a lot of sense at about 50,500 here, 50,634 it says. And as you can see on that takes you right here to this previous resistance right here. Previous resistance, previous support. You see how it pulls over here? Previous resistance, support going through there. And so then that gives you a wave 5 almost right there at the swing high right here at about 52,354. So I'm definitely watching this happen. Now the other possibility is that this is A down and this is still B developing. And so we have an A, B, and we'll have a C, which again should get up there around that 50,100, 50,200 area maybe. And then it would drop back down. So, whereas we have a 1, 2, it could be an A, B. And you get that C up there probably around that 50,000, 50,100 area. But then we would need to see it break down from that. So again, A, and then B up here, something like this. And then C coming down toward this S1 daily pivot here. See, I get the high volume node right there just above it. at about 39,720. Kind of that area. If it's not complete yet. If this is complete, then I think we may be seeing this flat correction maybe. Again, with the idea that we've got a flat here as a 1-2. Heading on up with that there. Or maybe not even flat. Maybe it's just an ABC down. But either way, a 1-2 here with that 3 heading up there. Right now, price again is nearing the top of this range here. You see we got all these swing highs right up in here. So, you know, if we can get a breakout through that, it should move up pretty well through this area. Because you've got this strong drop, it should move up pretty well through that area toward that 50,000 where you've got kind of like this odd-colored candle here. You've got these nice, you know, white candles going up, black candle pulling back, and then white candles going back up. So that would be that, again, that 50,000 area as that kind of resistance. We want to see if it breaks through or gets rejected and heads back down. Yeah, Twitch, man. You know, the bad thing about Twitch, I think what goes on with Twitch is that they optimize bandwidth for the really large accounts, and the rest of the smaller accounts suffer. I do have something. Oh man, guys, I want to tell you guys about this so bad. But we're going to continue to expand. You know, the companies I own, and we're going to do something amazing. What I believe is going to be absolutely amazing for traders. And I can't say it yet. We're in the process. I just signed the papers. So I'm in the process of getting a hold of everybody and getting things set up for it. But if that, once we do that, it'll give you another option. One of the things it'll do is give you another option for viewing, which might end up being a whole heck of a lot better than YouTube or Twitch. So, God, I want to say something so bad, but I can't. So just be paying attention, guys, to hear about that, all right? So excited. I told you, man. Q4 was going to be a blast for TWC. So good stuff. ICO? No. No, that would be the top, right? If we did an ICO or some sort, that would be a top. Or we tokenized TWC, that would be a top, I'm sure. Let me see here. Let me see here. Kind of catching up with you guys here. U.S. Canadians will try not to take it personally. Or us Canadians will try not to take it personally. You are long USDCAD. Man, I'm long money, all right? You know, I've got my opinions about what the dollar's going to do, as you guys have heard. You know, I've laid out the whole idea and what's going on, and we continue to revisit it and see if things have changed. But at the end of the day, guys, I'm long money, and if that means I have to short the dollar, I'll short the dollar. I don't care. I have no real attachment to the dollar as far as that goes, you know. I can make a lot more money just trading what needs to be traded rather than worrying about, you know, hopefully the dollar is going to continue to strengthen and make me, you know, make my wealth stronger or something silly like that. So yeah, I'm just long money, long wealth. Let me see here. That's right. A trade is just a trade. That's right. I got a Netflix show? Nah. I don't have a Netflix show. But yeah, I'll let you guys know as soon as I can. It'll probably be, I think, sometime within the next 2 to 4 weeks. I can probably let you guys know. So just be paying attention, guys. It's something I've been working toward for the last 4 years. So it's finally potentially coming into fruition here, and really excited about it. I'm long money, a bumper sticker. Please put that up for sale. Oh man, that would be cool, right? Put it on the EV Hummer. I'm long money. That's right, man. Oh man, Hank, you guessed it. OnlyFriends. Dang it. Not really. Isn't it called OnlyFans? I don't know. OnlyFriends? Is it OnlyFriends? I think it was OnlyFans. I'm so confused. All right, guys. So this is kind of what we're looking at, you know, just a bigger picture. Now, if we want to jump in here real quick, you know, with what we're looking at locally here, this is kind of what I've got locally here, you know, as a potential count all the way up as a 1 at the top. And this is if the bottom's not in, then we have an A, we've got a B, and we got a C. And so this is what I was talking about here. So we've broken out about above 46,900 here. And so that gives us a possibility that, again, instead of a 1, 2, we've got an A, B, and we're getting C here for B, right? So it's A down, and then A, B, C for B, and then C getting you down here around that 38, 39,000 area. If this is correct, my expectation is to see price break out above 48, 137, 48 here, and probably target again that 50,000 area. That's, as you can see here, is right at the top of this range. So I would look for a breakout there and a rejection, impulsive breakdown back through the 1 hour pivot here, and then taking out wave B at the bottom here should get us down toward that 39,000 area. You can note that if we use this one as the top, the 50% retracement then is that 39,050 kind of area. Okay? So this is the, this is just one of those times, guys, where there's no real telling for sure, even like with any real significance, of feeling about what price may be doing. Is it complete or not? I really don't know. But either way, now that we're breaking out above here, I think we're going to head on up toward that 50,000 area. If we continue up through 51,467, that increases the odds quite significantly that maybe that other account I was showing you that has it done here is done, and then this is a 1, 2, heading up to that local 3, heading up to the larger 3 that I talked about. So, this is kind of that local area here. I was talking to Discord, and until we break out above wave A here, we may still get a pullback toward this orange range, which is 44,960 or so to 45,230, around that area. If you get one wave up, and this is a 2, and you get a 3 and a 4 and a 5. So I could still see a rejection somewhere around this 1 hour pivot that pulls us back toward that area and then breaks back out, as a 1, 2, 3, 4, 5 heading up here. But we'll have to see if it does. Again, that's the idea that maybe, it's finishing wave C of B, which is going to be 5 waves up. Okay? So that's what I'm looking at there, guys. Once we're out of this range, whether it be a rejection here that sends us back down or a continuation breakout here, either way, we'll be set up to make a lot more money in a lot shorter period of time. Because if this is wave B completing toward here, wave C is going to be a pretty easy move down toward here. It's going to be an easy no. Well, you short it on down there. But if it continues to break out above 51,467, that's a pretty great clue that the bottom's probably in there and we're heading up. So in either case, there won't be a lot of this sideways that we've been doing here since, what is this, 7th of September or so? So about a week now. Whatever you do, guys, don't enter a trade, whether it's with Bitcoin or anything else, just because you're bored. Don't enter a trade because you're scared of missing out. You have that fear of missing out, okay? Those things are most likely going to lose you money time and time again. So it doesn't make any sense to do it, okay? Did I create my own TradingView site? Nah, that's too much work. But, in the future, who knows? Yeah, that's right. Can neither confirm nor deny anything. Definitely only friends. Glad you have no clue, Hank. Oh, man. By the way, we will have TWC merchandise coming out. We're finally getting around to that. And you guys will be able, if you're interested, to purchase some of that here in the next month or so. Again, the only reason I've done that is because I've had so many of y'all approach me about it over, the last probably 2 years or so. And I think I finally just given in and said, okay, we'll do it. So we've got some pretty cool stuff going on there. I think we've got some pretty cool ideas. So you know what? I'm long money. Consider it trademarked, guys. We'll be printing those up. There, in case I have to go to court with somebody over this, I've said it now. That was my intent. We're doing it right now. So there we go. Copyright laws and stuff, right? So we'll jump over the DXY real quick, and then we'll jump over into the stocks and kind of look here. So DXY, I was looking at this maybe as a 3 and a 4. With this move up and subsequent move down, dipped just below the swing low here. I think we've got a 1, 2, 3, 4, 5, and then an A, a B, and a C, I think here. So what we're looking for is we need a breakout above 92.664. That should add confidence to the idea that this 1, 2 is done here. And that'll give us a minimum wave 3 up here around the R3 1 hour pivot still. Again, confluence with the pivot is good for targets. Getting back above this pivot here will be good. So that's what I'm going to look for. We've still got this this pattern target here at 93.117 based on the height of this descending channel here. And as you can see, that gets you near the EQ of this 1 hour supply structure here. So even on the breakout up there, I don't know, this being a 1-2 here, this might be a 1 to this area and pull back for a 2, 3, 4, 5, gives you a 3, 4, 5, and then wave 3 might actually end up being higher. But right now, minimum up there around that 93.8 area. And so, again, guys, as you know, if the dollar's going up, that puts downward price pressure on things that are denominated in dollars. But again, as far as Bitcoin, because Bitcoin tends to move so fast at times, that, it could, as DXY is advancing, Bitcoin could be pulling back in a slower fashion. And then when the DXY starts pulling up, Bitcoin could rocket back up, And so there is, again, I've explained this before, how could, if the DXY continues to rise through Q4, how could we expect Bitcoin to potentially hit new all-time highs? And that would be the long and short of it, the real quick answer there. But at the end of the day, it's about the overall trend. And they don't diverge immediately. The market has to become convinced that it's doing the one thing or the other. And so, people are just blindly bullish on Bitcoin until they're not anymore, right? And they won't be blindly bullish forever. They'll get to that point where they're not. And then that's when we'll see, Bitcoin kind of top out. Same thing that happened there in 2017 and whatnot. Or heck, even in temporarily there in June of 2019 when we gave you that top there. So, I think a lot of you guys, when you think about inverse correlations and whatnot with the dollar, you think that, okay, the dollar's moving up right here, so Bitcoin has to be moving down right there. And it's a much broader correlation. And part of that is because the DXY is a weighted index of multiple currencies. The Great British Pound, the Euro, the Swissy, the Yen, the Loonie. And so all of them make up the value of the DXY to a certain degree, the Euro being the greatest one there with about 58% of that weighted value of the DXY. So, you have multiple things playing in there to give us the value of the DXY, which you're then using to compare against, Bitcoin and what's going on there. So that's part of the reason why it does that. And not just with Bitcoin, but with other things as well. So, yeah. Let me see here. And you guys talking about stuff. I am long money, delivers no Google search. I'm telling you guys, it's going to be done today. I'll get it done today. I'll get it printed today. Designed today. And then it'll be mine. You need an extra large t-shirt that says I'm long money, Mark? I guess I'll put, sure, why not? I'll put it on the t-shirts and other stuff as well. Why not, right? You guys are a mess, man. I love it. You guys are awesome. Okay, so that's what we're kind of looking at there. Now, if we jump over here and we look at what's going on with the stock market, right? Let me kind of find my stock market charts here. So we can look at the NASDAQ. Senor NASDAQ. Again, tech heavy. So if the NASDAQ's going down, it's because techs aren't looking too good, right? And techs have been the driver of growth in the stock market for years now, right? So right now, I think what we may have is wave 4 done at this morning's open. You gapped up there, and then it dropped back down. It completely faded the gap right back down, pushed up, getting rejected right around this same pivot area here again. So, wave 5, well, actually, if this is a 1-2 here, we were looking at wave 5 having a minimum expected target of this S2 15-minute pivot right around 14,933 or so. If this is 1-2 here, yeah, right around that same area. See, we've got the 14,914. So kind of around that area is where I'd be looking. And that's just wave 5 of what would be 3. So 1, 2, 3 here. Let's see how that lines up with the projection of wave 3. Yeah, see, that'll get us. Wave 3 had that minimum expected target up here of 15,028, but we've overextended here. We've had a subdivision of wave 3, which is taking it lower toward almost that 2.272 extension of wave 1. So, yeah, looks good for continuation down toward that area. Kind of throw it on here. 49.14, yeah, that's close enough. So that's where I'm going to be looking for it to head down toward. We're looking for a breakdown right now below this swing low right here now, which is 15,064 and 4 cents. And then, of course, below wave B right here, this will really add confidence to it. That's the 15,032 and 58 cents. Get through that. Look on down there toward it. I think we're probably good to go with that. Let me see here. Imagine diapers with the print. The only thing you control is how much you lose. Oh my gosh. And tell you right up there with the babies lose more than 1%. Nah, routinely. You guys are awful. All right, let's jump over. So we go from the very tech heavy NASDAQ as always, and then we'll move to the less tech heavy, but still significant tech portion here with the S&P. So these are the E-minis. As always, we look at. We've got an A, a B, and a C. C completed wave 4 at the previous wave 4, the lesser degree. Again, usually kind of where we're looking at. It's also the 1 hour pivot. We've broken down below the wave B, which should add confidence to the idea we're heading down here toward a minimum target of 44.05 to 44.15, right below that 1 hour S1 pivot there. Now, if we get there and even lower, whatever, in that area, I'm kind of expecting price to still find rejection right around this pivot area. So this would be a 1. We get a 2 up toward this pivot area, and then 3 down after that. So that's kind of looking ahead what I would be expecting as it does. I think, we're on that down. Right now it looks like we're on that downhill slope here. We still need to get down below. Let me see here. I don't know why this is off, but this wave 4 swing low here. That's 43.47.75. 43.47.75. All right. And if we can get through that, that's going to add confidence to this larger count. It's going to start adding some confidence to the larger count that maybe the more macro top is in. Now, remember, guys, some of you may have thought that if we were hitting the top up here, that there was going to be some large decline right away, like a blow-off top. And I'd been mentioning for a very long time that it was possible, but with everybody expecting it, with the run-up, we might end up getting some sideways as the supply starts coming in, and people are still thinking it's going to go up, and they're still buying all that supply, right? Remember, I pointed out that in 1987, when we had Black Monday, and then, of course, in 1929, we had the top of the market before the Great Depression. Remember, the tops of the markets came in August, and it wasn't until, October? That we had the first large move down. And so, we could see this again, just continue what it's doing here, down, up, down, and then get ready for the big push down, potentially in October or November or something like that. So, again, don't think because it didn't just blow off and come back down that it has to go up further. It could still go up further. We just have to, adjust the count. But right now it looks really not so great. I think this is the longest streak that the indexes have had down probably within the last year or so. Or sometime within this last year. So it's been a while. So we'll keep seeing how this is going here. The only thing you can lose is control of the markets. Your ideas are gold, guys. Gold, I tell you. I'm keeping all the money anyway, but still, they're gold. Let me see here. And so, of course, then we go to the Dow Jones Industrial Average, which again is much more broader based. It's only 30 stocks in it. But as you can see here, again, same idea. We've got this low here. Except I think wave 3, wave circle 5 may be subdividing here. I think we've got a 1, 2, And then we've got a 3 down here at 34,023. So wave 5, wave circle 5 may actually get closer down here toward this wave 2 swing low. You know, maybe around 33,820 or so. So we'll see if we can get this move down because we've got this as a 1, 2, 3, 4, 5. It's like a leading diagonal there, I think. And so then ABC up. We've dropped down through B. That should add confidence to the count. We drop through wave 1, and we should really kind of be heading down lower there, right? The only other thing that might change that, guys, is if this ends up being a flat correction. So ABC up, ABC down, and then 5 back up. And we'd still be looking for just to target kind of this 35,080, 35,090 area up here. Maybe wave 4 up there, 35,210. Kind of that area for C. And then we'd expect it to go down. But right now, until that happens, I think we're looking, you know, further down here for wave 3. Wave parentheses 3 of wave circle 5. All right. Whatever happened to Dave's stocks only go up Portnoy? I really don't know. I really don't know. I haven't heard from him. I haven't seen him out there doing his annoying stuff for quite a while. So I don't know. Maybe he got tired of losing people enough money or something. We'll see. Let me see here. Oil, man. Oil's been this, oil's been a stinker. Let me tell you guys. And it's not just because oil stinks. But looking for the possibility, we're getting some downside here. We've broken down through this local swing low. So potentially, you remember, I'm still looking at this as a leading diagonal coming off this, what was that, 74 or so? About $76, $76.50 swing high up here. I've got this as a 1, 2, 3, 4, and then we should have an ABC down for 5, which has to just get below wave 3 here at around 61.82 or so. 61.74, somewhere right around there. It's just got to get ABC down below that, but, you know, again, we'll always look for it to kind of hit, because it's descending here, the descending support. And at that case, you know, that would be a 1 or an A with my count. And so then we'd have a move up for a 2 or a B, and that'll determine whether it's a 2 or a B. You know, does it, you know, what is it doing as it plays out there? But right now, we're looking for an impulsive breakdown through the 1 hour pivot here at around $69.10. If we can get that, that'll be the first clue that top may be in, the first real kind of clue there. Further breakdown below 67.02, that's wave B of 4. If we can get through that, that'll add confidence to the count as we look for it to continue lower there, right? Yeah, West Texas crude, man. Yeah, you guys know I'm from San Angelo. So that's right down the road from Midland. Whole bunch of oil out there. In case you guys don't know, man, when it gets bad, when the oil prices get, you know, really kind of start moving higher, it gets so bad in the Midland Odessa area that there's literally no houses to buy, there's no places to live. So they have created basically these tent cities along the highway where these oil workers basically live. You know, guys, if you don't know, oil work is tough stuff, man. And they're out there busting their rear ends for, you know, 80 hours a week plus with hard physical manual labor. And then they go home to those tent cities, basically. So what's happened is over the last few times when oil was up there, really kind of moving up, they've expanded out to San Angelo and Abilene and whatnot. And so the companies end up then paying them drive time as well. So, but they, you know, they got to drive an hour and a half, 2 hours to work, stay there a week, drive, you know, hour and a half, 2 hours back. They get all paid time. Then they, you know, they're home for a few days and then back out there for, you know, quite a while to work again. Oil rigging, man, it's a tough job. I'm gonna tell you guys right now, if you don't know, it's a tough job. But anyway, yeah. So now I'm down here in the San Antonio area where we have a lot of that sideways drilling, a lot of that fracking going on, which helped the U.S. to reclaim the top spot in oil production and oil sales and whatnot. So. But it's an expensive process, guys. Fracking. If you guys haven't been following me long enough for me to explain to you this whole thing, I did a big explanation during May of 2020 when oil did that drop down to the negatives there. I mean, I think it hit like a negative 42 a barrel. Basically, those who add oil were paying people $42 a barrel to take the oil from them. They were paying them. But, you know, if they had the contracts and everything on it. Because with WTI, you know, if you're doing North Brent, your contracts can be settled in cash. It doesn't have to be settled in oil. WTI, if you hold the contract at the end of that contract period, it's going to get settled in oil. And, of course, everything was loaded up. Everything was backed up. There was no more room in Cushing, Oklahoma, which is the main port. If you don't know, in the U.S., all the oil comes through pipelines. And Cushing, Oklahoma is where it all settles into. That's the main port there. And so, yeah, it was just a big bunch of, whoo, man. So, you know, as somebody raised out here in, you know, West Texas area, you know, that was just some crazy, crazy times right there. Yeah, I had lots of phone calls with lots of friends who were in oil talking about that at the time. Anyway, so yeah, so, you know, oil kind of doing its thing here. We're looking for this breakdown here. And I'll tell you what, if we get this breakdown and, you know, the DXY continues to move up as I expect here, that's a double whammy on that USDCAD pair. Because remember, the loonie, the Canadian dollar, derives a significant portion of its value. It's a commodity currency. So a lot of its value is dependent upon the commodity underlying it. In other words, oil in this case. I think Canada gets something like 20 or 25% of their revenue from oil sales, from exporting oils. Oils. Natural oils, no. Anyway, and so what that means is if the oil price is going down, that's going to pull down the value of the CAD, of the loonie. So if we have that, while simultaneously the value of the dollar is rising, then your USD CAD pair is an easy long. So that's what we'll continue to watch for there. It's why I've been so passionate about trading the USD CAD during the summer here, as we've been doing it. You know, as I've posted there on Twitter and everything. Let's see here. Silver. Let's look at some precious metals, guys. I haven't heard people talking a whole lot about silver lately. Is everybody still interested in silver? Did the Wall Street Bets crowd get tired of trying to squeeze silver? I think what we may have going here, I think we've got a 1, 2, and then we may have a 1, and we're working on a 2 here. So maybe something like, maybe a 1, ABC is a 2. Take it down a notch there. If so, as you can see here, see here, there we go. Yeah, right now we've gone over 50%. So, you know, kind of looking up here, maybe toward this resistance support area right here around 70.5 at $24.05. That might kind of be where that target would be. And then we would look for a breakdown, of course, below wave B right here. That would be our added confidence right there. That's where you need to see it really kind of go through to say, okay, it's likely topped out and heading back down now. And that's right there at 23,435. So I'll pop this over here onto the charts here. Makes it easy. By the way, guys, if you don't know, at Texas West Capital, when I provide charts, they're pretty much always live charts. So you get the chart that you can watch it all happening live, or you can copy and make it yours and whatever. Just something I try to do to help our members out, so they don't have to try and chart it on their own charts. But nonetheless, what we're going to look for is a rejection, at least, you know, a rejection before wave 2 here. So, you know, it could end up getting into this 78.6 area right in this cluster, right below the pivot. I could see it potentially going up and then coming down. Locally, if you wanted to short that breakdown there, let's say it makes it to 78.6. Your minimum wave parentheses 3 is going to be down here around $22.50. If it's at 70.5, it'll be a little bit lower there, right around $22.46. But that'll just be this interior. This will be this wave 3 subdividing. And that's generally what we would expect. You remember, wave 3s are usually your largest waves. They go the furthest. They have the most volume usually. So we would expect to see on this wave 3 of 3, on that breakdown, we'd expect to see larger volume, larger candle spreads, kind of really breaking it down. So yeah, that's what I would look for right there as far as all this goes. So yeah, if you're into silver there you go. That's what I'm kind of looking at. Now, the other thing about silver, remember, we've got this. Silver's really been going sideways since back here around August of last year. So just over a year now, guys. You believe that? It's been going sideways. Again, to me, if I look at this via Wyckoff here, and I look at this price action and volume, it's either going to be reaccumulation or it's going to be distribution, right? I don't think it's reaccumulation because as we've played out here, you continue to have volume spikes all throughout it. See this here, big one there, here. And so not only that, but this really big one here, this huge volume spike, almost as much as what you had on this first drop here, up here at the highs. This means there was a significant amount of volume being sold at the top there. And when you get volume being sold, when you have supply being sold at such great volumes at the top of a range, it's most often indicative of distribution. Now, it's possible, this is a large range, it's possible we've got our buying climax, automatic reaction, secondary test, up thrust. So this is still, it's possible this is still phase B. And that would compensate for the idea that we've still got spikes of volume in this here. But as we get through this part, we should see volume tapering off. And we do, kind of, but we've still got these large spikes of volume showing up. And that bothers me in terms of this being reaccumulation here. Now, like I said, overall volume is coming down off the top here. But if we look at this point right here, volume stays relatively in the same area. These spikes all coming back up to the same area here. All through this. And then you have the sales here, boom. You see a lot of volume coming in for supply. A lot of supply coming in right there to send it down. Comes on down here, guess what? More volume being sent down into the lows. This is selling into the lows. You didn't get a strong reaction off. You got a little bit of a reaction, but not a really strong one. And so now we're kind of doing this overlapping thing here. And it makes it questionable. Now we're falling below the daily pivot here. I mean, I'm thinking we're going to get a breakdown through here at least. So even if it is reaccumulation, I think we're at least getting a spring of some sort down here in the 20s. But again, if we start seeing this, if we start seeing volume picking up and candle spreads expand as we go down through here, that's going to most likely indicate that we've got distribution here and we're done and we're heading back down. My silver target still remains the same. I think we're still going below $10. Gold, I think we're still going below $1,000. But, we'll continue to watch it as it develops and see if we're there. I've been right so far, generally. We haven't continued higher, so that's a good thing, as far as what I said. But we need to see some, resolution of this range here to really kind of look there. Now, interestingly, on the gold chart, here's where it gets interesting, guys. So I mentioned earlier in the program about gold, right? And I said there may be something going on in gold that happened that will potentially, let me kind of close all this off so we can see this better, may hint that there's some kind of stress in this financial system. Again, with this pumping of QE, right? But this lack of available treasuries, right? Again, it causes the liquidity issue there because you just don't have that you can find, right? So right around here in August, this right here is what I'm talking about. This sudden drop right here. So the chatter going around is that some large player, some large fund or something, did not have the treasuries it needed to cover what it needed to cover. And so their gold positions were liquidated suddenly as a result. All this stuff plays in together, guys. It's not what you think it is when it comes to gold and silver. Oh, gold and silver, inflation hedge, blah, blah, blah. It's not what you think. Not like that. When you start to look, how do dollars actually enter and exit the system? And when they're in there, even though there's a lot there, is it kept in a certain area? And in that certain area, can it not, is there not enough treasuries to counter it? And what goes on with all that? There's all that going on in there. Let me see here. You kind of said a couple months a week ago that silver's going. No. I didn't say 40 was going. I said if it breaks out. Oh, you guys need to listen, guys. I said if it breaks out of that range there's the possibility it could go to 35 or 40. If it did that. But until it does that, my bias is still toward that. Yes, Hank, $8. Yes. Below $10, $8. Yes. You guys need to stop doing this thing where you're trying to catch me or something. I'm not saying anything I haven't already said. All right? Just pay attention, guys, okay? Anyway, yeah, so looking at this right here, this could be a problem because, Congress still hasn't changed the debt ceiling right now. And the Yellen is running just a week ahead now with the treasuries. Nothing more than that. Back in the summer they had to get that the general account down, right? And so there's this lack of balance between treasuries and dollars. Now with the reverse repo, the Fed can step in and temporarily, as long as they keep their reverse repo facility open, they can help keep really bad things from happening to the market, right? Because the Fed has a collection of treasuries that, again, it does overnight lending, right? But it can't fix the issue. The only way the issue gets fixed, the only way we can fix what's going on with the money situation right now is increased bank lending. Banks need to start increasing lending quite a bit. But again, if we look at the Fed, at the Fed site, see here, I think I've got it somewhere here. Oh yeah, let's see right here. Let me see here. Actually, you know what? I've got it on my. I don't even have to look it up. I posted all the images there because they didn't expand there with the newsletter, so I went ahead and posted them all there for you guys. Let's see. Gotta pull this out over here so you guys can see this. Which one are we looking at here? Fred. This is the one. Okay, yeah, so this is your loans and leases in bank credit, all commercial banks. This is what I was talking about, the year over year, it's much lower. And here's the problem. We've got some move up here this summer, right? But the problem is if this Delta variant continues to flare up like it is, and governments continue to act like governments are going to act, we could see a slowdown, if not a shutdown of business again. And this right here is not going to continue. This is going to continue lower. This is going to sharp turn back down. But we need, because of the dollars that are out there and the primary dealers, the banks, money markets and whatnot, you need this commercial lending to continue to rise. You need it to take care of that issue. So the Fed can try to prop it up, try to band-aid it locally for the year. But if there's a big issue with Treasury, with the amount of treasuries out there, there's only so much the Fed can do. And it could get really interesting. Let me see here. Let me see here. That's why you said kind of, Oscar. Let me see here. So yeah, so we've got that. Some other charts that I had in the newsletter here, guys. Again, these are the yields on the 1 month treasuries. These are your short term, and this is where the problems come in. This short term yield keeps dropping. And so the Fed is trying to keep this from continuing to drop. Let me see here. What other charts do we have here? If we were looking at this, I had this chart right here. And so this was the Wyckoff look at what we're looking at here with the ranges here with Bitcoin on the daily, okay? So we had our distribution up here. We had markdown. We had our reaccumulation right here. I don't know that anybody else was really talking. I'm sure somebody had to have been talking about it somewhere. I didn't see anybody talking about it, but nonetheless, this is where it was. We have the volume and the candle spread here to give us that jump across the creek. And then we've got potentially, like I said, here, the back edge of creek here or down here. And again, this is what we were going back at the beginning there, is this maybe a flat here with your A, your B, your C, kind of what we're looking at here, right? With this move up here being a flat, right? So you get your B up here and then your C down here. Do we have that there, or is this A, B, and then C coming down? So anyway, I discussed this in the newsletter if you want to get a bigger, better understanding of what I'm looking at here. But nonetheless, at the end of the day, everybody that's talking about it's got to go down below here, it doesn't make sense. Volume and price action currently, it doesn't make sense. All we've done really is we're retesting this previous accumulation range. Support up here as resistance to support. And this is what we usually do. This all together would be a specific type of reaccumulation called reaccumulation after decline. And that gives you, again, it gives you your distribution, a short distribution area, sharp decline, and then a reaccumulation area down there, or an accumulation area, sets it up. But this is a big reaccumulation area in your larger picture coming off, coming off the March 2020 low. So, again, guys, if you think it has to go lower here, it doesn't really make any sense. I'm sure you can find a count with Elliott Wave, but, when you bring in Wyckoff here and you look at that price action and volume, it doesn't make a whole lot of sense. So, like I said, definitely jump in there to the newsletter and check that out. You'll see what I'm talking about there. Let's see here. This was the gold I was talking about, the issue with gold that we had there. Now, as long as gold remains above the daily pivot, there's a good chance we could see that thing kind of heading up higher there. But if we lose that daily pivot, that's going to be your first clue that price has potentially resumed its downtrend. And then, of course, you want to see it take out that swing low there. Let me see here. Larger pictures of the markets here. Let me show you something. Where is it? Where do I have it? Is it this one? This one. So this is the NASDAQ composite here that we looked at earlier. This is the big weekly chart here, right? So we got the Chuvashov fork right here. And as you can see, the bottom tine of this fork, the support tine there, aligns with this ending diagonal right here, right? The other thing we can look at is we've got a throw over, it appears, 2 weeks ago. And last week, we've got a bearish engulfing candle that pulls price immediately back down into the wedge. This is pretty much textbook wedge action here. And if it is an ending wedge there, we should be able to, it should drop on down. This should mark some sort of top here. So, you're looking for a breakdown through the ascending support, and then really you're looking for a breakdown below 14,423 and 16 cents. Oh, that's why I had that on there. That was why I had that one. I said, why is that on there? That kind of area is where we're really looking for that breakdown. If we can go there, I think that really starts looking like this may be the top here. All right. Where is the creek? Oh, Lord have mercy. The creek is right here. The resistance. That's what the creek is. Okay? And you get the jump across the creek when you have the large volume and the large candle spread. You usually see that on a wave 3, a rally. Yeah. So that's where it is. I find that the challenge with Elliott is that when the count changes, the expected targets change wildly. It can. Sure, it can. But really, again, remember, guys, I think the best way you apply Elliott Wave isn't necessarily for these large targets. It's more or less for an understanding of the trend and where you might look that the trend might reverse. I think those are the biggest uses for it. I think a lot of new people that come with Elliott Wave, they think, oh man, I can do Elliott Wave and it's going to tell me exactly where price is going. Well, sometimes it works out or you get pretty close to it. But a lot of times it's just a validation of the trend with your stops along the way. Think of it as Route 66 here in the U.S. and you've got your tourist points along the way. And that would be those, potential targets as it runs there. But yeah, and as long as you're managing your risk properly, which is what you should be doing anyway, the few times it's wrong isn't a big deal because when it's right, it's really, really, really right. And you make up a lot more than you ever lost and a lot more beyond that. So yeah. It won't necessarily come right down to it, Hank. Your back of the edge of the creek doesn't have to come right down to it. So, this, it could be, it's think of it as basically the backup to this resistance here. That's really what you're looking at. All right. Maybe this becomes the back of the edge of the creek here. In either case, all you're looking for is a pullback toward your resistance before it continues higher here. But again, if this is why I put this down here. Back of the edge of the creek here or down here. Because this is that one, this is that A, B, C potential move here. And it gets you right down. That resistance becomes support at that point. See what I'm saying? That's what it's there. So maybe here, potentially here. It depends on what goes on in this area here. Do we get this breakout, or we just move up to finish B and then we come down for C? So yeah. What's going on, WattR21? Good to see you. So anyway, yeah, pay attention to what I'm actually writing there, guys. Don't just focus on one little thing and miss the rest of it right there by it, okay? Make sure you guys are paying attention to what I'm talking about fully in there. Like I said, get the newsletters explained in there as well. About the movement potentially back there. But jumping on the back here real quick with our stocks, with our indexes. Again, we've got this Chuva Shop fork, which looks, if we're dropping down through that, it's telling me this is a good possibility. This is a top up here, a macro top. We've got the same kind of thing happening here. This is the E-minis, right? So again, Chuva Shop fork, right? It's got a bit further it needs to fall though, okay? But nonetheless, this breakdown through this support tine here, or this swing low at around 4,029.25, that's what you're looking for. You get a breakdown through there, and at that time, it's really kind of looking like that's it. You can do the same thing. I didn't do it here, but you can do the same thing with a diagonal here. And then you've got this up at the top of the diagonal, and you get this large bearish engulfing coming down. And so then you would have your other one here, support right there. So a breakdown through that becomes your first clue. Break it down through this right here really kind of adds a lot of confidence to the idea that maybe that macro top is in. Let me see here. What should we talk about there real quick? Oh, no. Oh, yeah. Let me do this. Okay. Haha. All right, guys. Let me bring you up. Let me show you something here. I almost forgot to talk about this. So here's the newsletter. It'll look better, I promise, guys, as I continue to get better at it. Let me see here. This 3-chart segment here. Now, so we talk about reverse repo, right? Get rid of this idiot real quick. There we go. So anyway, Hank, I've explained it. So I'm not going to continue going and explaining it more, okay? But here's the interesting thing. So the big thing we're talking about is reverse repo, right? And dollar liquidity, right? So here's reverse repo from 2014 to now, okay? Now what I want you to pay attention to is 2014 to now for the dollar, 2014 to now for gold, right? Notice what happens when reverse repo runs up, the value of the dollar runs up. See? And when it drops down, value of that dollar kind of drops down there, right? And now we got this huge move up, and this dollar started to move up. So maybe this tells us we could have this huge thing, right? But the opposite happens with gold. See if I can kind of get this in here. So gold, as the reverse repo facilities load up, gold drops. And then as it drops, gold rises. And then as it rises again, gold starts dropping. So when you look, I mean, this is a pretty interesting 3-chart series right here, guys. Again, if you continue to think of the dollar on its own without anything else, I think you're going to be in for, a bad day, bad time. As they said on South Park there, right? But I think it's definitely something to continue watching. Now, what does that mean come October, November, when maybe the debt ceiling, raises or lowers, and We continue to see how this reverse repo facility continues to do. But, until that point right now, we've got over $1 trillion nightly that comes into that reverse repo. And it continues to rise. We continue to make new all-time highs every so often. So more and more money's going in there, and they've continued to make it easier to allow a greater swath of entities into it. I think right now we're up to 85 or 86 took advantage of it last time. And so they're making it more and more accessible, which means we should continue to see more and more money coming through it. And if this historical show on here continues to play out, I mean, to me, it makes no sense that that the gold would rally to new highs and that the dollar would would decline to new lows. Again, nothing's guaranteed, but just trying to make sense of what's going on here, guys. Okay. Let me see here. Crypto Girl says, I'm a little late. Oh, hey, yeah, good to see you checking in, Crypto Girl. Yeah, I don't know if I'm a big fan about the whole lower and upper creek thing, Hank. I've seen it before. It's not... For me, that for me is kind of like Elliott Wave with the idea of truncated fifths. I'm not a fan. I do everything I can to try and see if there's a better count that doesn't have a truncated. Because most of the time there is. But anyway, we'll see. I kind of have that same view when it comes to the idea of this upper and lower creek. And remember, all this idea of the creek is new. It's not something that Wyckoff originally did. It was something somebody else said along the way later. A lot of what some of these labeling, I can't say a lot, but some of these labelings that we have now are not from Wyckoff. They're from additions to what he's taught since then. So, I have them, but I don't... For me, it's more of a... as a secondary thought in there, I guess is the way to say it. First and foremost is Wyckoff and how he taught it. And then secondary, we add some of the newer stuff to potentially get some more clarification. But, secondary is secondary, right? I think it's the best way to probably explain it, guys. Both my approach to truncated waves in Elliott Wave and the idea of higher lower creeks and jump across the creek and fall through the ice and some of these terms that have come about more recently, the last few decades or so. So, yeah. Let me see here. Hank is both affluent and fluent. Is it fluent? You definitely want to jump across to the writer says, you guys are a mess. But anyway, guys, so I don't know if you've ever seen this. I don't know that you've ever seen it. I've never actually really remembered to talk about it before, so I'm glad I remembered to do it today and in the newsletter. But definitely, man, it's something really to look at here in terms of gold and dollar movement in relation to these RRP. And again, that's why, what we talk about with that gold situation, that drop there, maybe something, important to watch. Again, maybe giving us this idea that, that something may not be right and that there could be a stress. We know that QE puts a stress on the system and the way it runs because of this idea that there's spigots and there have to be outflows for, the fiat as it comes in and goes out. And that's all tempered with the treasuries and their availability and whatnot. But then all that is tempered with what is the overall economy doing? How is it going there? Are banks making those loans that they need to make so that things move more fluidly? So that the pressure is relieved, I guess is the way to say it. So this is how we end up getting those liquidity issues, even though the Fed has pumped all this, the Fed has pumped all this money into the system. You remember that money doesn't actually make it to you and me, guys. It's not actually in where it matters to us, as far as circulation-wise goes. That money that's printed at the bank, those loans that are created at the bank, that's the money that you think about when you're thinking about inflation and stuff. This other set is in its own kind of area that you can't get into. But they still have to have a regulator on that, a regulator valve, so to speak, right? And that's what the banks need to do with the lending. Remember, I told you a lot of money that the Fed prints goes into their vault, which can't be touched by anybody. but your banks can reference it as having enough reserves, because by law they're required to hold so much reserves so that they can make the loans. See, it's there so that your banks are encouraged to make loans. So if your banks aren't making those loans, money's just sitting there. It's not doing anything. It's a multi-step system to get out into the economy, guys. Okay? Macro seems to be keeping a bunch of conflicting thoughts in your head all at the same time. Not really. I mean, again, it's the idea that, when you don't know about it and you think about inflation and deflation and money printing and T-bills and whatnot, you think of them all kind of separately. You don't understand how they all, we don't generally understand how they all interact in this very complex financial system, right? And so then it seems like it's a bunch of conflicting stuff going on. But as you get into it and you get used to to hearing it and understanding how it moves, how that money moves through there, you see that it's not really a lot of conflicting thoughts in there. It really is, moving that's going on there. And this, its failure to move or its movement or its failure to move, leads to these other things that are happening, right? So think of it like, God, I wish I had a picture or something. But think of it like you have a bunch of pipes, right? And each pipe has valves, right? And so if you turn off the valve, if you've got this pipe going across and you've got another pipe coming up from it, right? And you turn off that valve, the pipe can, the water or whatever can only go through the pipe straight across, right? But if you open that valve, it can go up this other way, in which case you have more pipes and more valves, more pipes and more valves the other way, right? Oh God, don't even get me started with that guy. Don't even get me started with that guy. He plagiarized so much in his little articles there. Holy crud. And then he passes it off as his own, man. I have no respect for that at all. Sorry. I mean, he's like taking verbiage word for word from it. But anyway, I won't go into that there. So anyway, yeah. So think of this financial system that we have, guys, as a bunch of pipes with a bunch of valves. And depending on where the valves are opened, determines how that kind of moves, right? And so that's why you can have something that looks really bad, but it not actually be really bad because of the way in which it's flowing. That's the best way I can kind of explain it at the moment. No, that's plagiarism, Hank. Here in the U.S., that is plagiarism, what he did. Yeah, no, that is plagiarism. Like I said, I'm not going to go into it. I've said what I need to say about it. But it is what it is. Have I read Nelson Nash's book, Becoming Your Own Banker? I haven't. But, it sounds like it has something to do with Bitcoin, right? And I got to warn you guys, a lot of the narrative when you get sucked into here and you have big thoughts and big ideas about Bitcoin is this whole idea that people can become their own banker, right? And so the people in general don't want to be their own banker, just like they don't want to provide their own security, which is why they allow government to pass laws that it does. Because, the government passes laws under the guise of security. So if you think back to the Patriot Act after the 9/11 attacks, that was just a foothold to usurp more power for that, for government, right? And that's what it's happened since then. They've referenced that to be able to grab more power, right? And so, but people, they allowed that to happen because government said, we need to do this to keep you safe, right? It's always under the guise of security. That's the way government works. They get you to allow them to do things under the guise of it's better for you. It's going to protect you. And so people generally don't want to be their own. They don't want to take care of their own safety or whatever, which is kind of silly because how safe is it really, right? As it is, people are always dying left and right as it is. But nonetheless, people do that. And I think it's the same thing with becoming your own banker. I like the concept myself. I like the idea of being my own banker personally. But most normal people, which is people other than us guys, they don't want to do that. It's too much they have to think about. They'd rather the bank just do the job, whatever. Then they can complain about the bank. but they don't have to do it themselves, right? And I think that's my only issue there. I'm interested in reading the book, though, so I do appreciate it, right? So I'll definitely see if I can't get it and look at it. But yeah, I don't think that's the right approach for Bitcoiners to get people into Bitcoin and crypto. I don't think it's the right approach. I've said for years now that in order for Bitcoin to really go mainstream and be used really, people talk about it, but it's not mainstream use, which is where it needs to be. And it won't do that until it's easier to do. The long wallet numbers, the inability to get your money back if you send it to the wrong place or to the wrong wallet, all these things are going to keep it from becoming widely used. Other things that will keep it from becoming widely used right now as money is that here in the US, for instance, if you're a business like me and we accept crypto, well, our taxes are greater on that because it's not taxed as normal income. It's taxed as short or long-term capital gains. And so that's another big deterrent, right? That's all great and fine and dandy if you can accept it and hold it for a while and the price goes up. But if one of those three things is not working, it doesn't make it a good business decision to accept it. El Salvador recently legalized Bitcoin over there, right? But they did it in this really crazy, kind of authoritarian way. And what we're finding out is a lot of people in El Salvador don't want it. They don't want it to be their currency. Most of them do not understand its value. They don't know what its value is. So why would they want it to be? But you have all us privileged first worlders here, right? We're all like, yeah, El Salvador's using, look at that. But the reality of it is, we're doing that from our cushy little lofts, right? In reality, in actual use, it's not such a great thing. It works great if it goes up in value and people can understand. People that are forced to use it can understand how to use it. And you know what? If they're forced to use it, sure, maybe they'll learn how. Maybe it creates an underground for some other currency. Where people prefer to use something that's a little bit more stable. Because what happens if it goes up and people understand that and it's worth a lot more? Everybody's feeling great. But what happens when it drops down for a year or 2 years in a bear market? And so there's a lot of questions on that. No, they forced it. The El Salvadorian government kind of just passed it through a online video conference type thing, I guess. They did it all of a sudden. There was no going out there and meeting with everybody and making sure it's what they wanted and all this other stuff. They just said they went from recognize it to using it. Yeah. Yeah, it's good stuff. But anyway, crazy stuff. Let me kind of catch up with you guys here. Yeah, Hank says, just one question. Who is holding the private keys for the Bitcoin holdings of El Salvador? Thinking about that should make it clear why banks exist and why Bitcoin will be no currency. I mean, I think Hank brings up some good points there. This was my big concern about this is, so some guy in charge of some country goes in there and says, hey, we're going to use this now. So now you have to do this. So what happens if he just runs off with it, right? And you say, oh, no, it can't happen. But look at Libya, Gaddafi in Libya, right? All that country's money went to him, right? Now, eventually he was pulled out in the streets and beat and killed and whatever. But this happens routinely throughout history with despot governments, right? And so I've been concerned. That was one of my concerns when they started talking about El Salvador. I was thinking about doing that. That was one of the first things I poked. One of the first questions I posed was, well, who has control of that? What keeps this guy from just walking off with it? Or what keeps him from, using it to complete some huge government coup that keeps him as president forever and ever under this iron fist kind of thing, Yeah, and I don't know if it's going to happen, but these are questions that need to be asked, and I don't think they were, or they weren't addressed very strongly. right? They weren't. They were left just kind of there. So yeah, definitely some good points there by Hank. As far as what's going to go on with it. Have they made sure that he can't take it? Does he have access to it? I mean, even if he can't take it, does he have some kind of access to it to spend it in some way that he wants? Yeah, it's a lot of crazy stuff going on there. Let's see here. Let me see here. Do I have any reading recommendations regarding future economy issues for soon-to-be retirees with a 401k, etc.? I have my list of stuff at, where is it? Let me see here. Try one more time. Whoa! Alright. Sorry about that. Hit the wrong button on this thing going too quick here. I'm just trying to find that link. I apologize here. Are you kidding me? Oh, there we go. All right, I found it here finally. Let me get this link here. So I do have this link here actually, with books that I've read and that I would recommend. I think what you're asking is what to do with your money, right? I don't know that I've got anything in there at the moment. I've got things that talk about cycles, which I think is important for understanding what may be happening. But I think as far as a book, let me see here, what to do with your money. Oh, wait, maybe this one. Let's see here. This, I think, is the older copy. Let me make sure here real quick, and I'll pop it up over here. I think they released... Oh, yeah, okay. So, this one... let me kind of put it... I guess let me just put it in here. So, this was the one they wrote in 2009. It's called Conquer the Crash. And it was actually put together by EWI over there. Okay? But I believe they've got a new one. Let me see here. Let me see if I can find it for you real quick. Ah, yes. They've got this one here that Prechter wrote. I think, and it's one of the better ones I can find. If things are going to happen like we're thinking they may happen, I think this is probably one of the best ones here. As far as what to expect and how to go about it there. And that would be that second link I put on there, Conquer the Crash, ElliottWave.com. And I don't get anything from showing you this book or anything. So if it bothers you that I would get a kickback, don't worry, I'm not getting a kickback here with this with this book right here. Yeah, I think it's probably one of the better ways to open up your mind about what if it was to hit that deflationary stage, how that would affect money and markets and 401ks and stuff like that, mortgages, stuff like that. Yeah, you're welcome. You're welcome. I'll see if I can find something else for you guys, but right now that's the only one I can think of right off that does a real good job of that. I'm sure there's other ones out there, but it's the only one I can think of right off the top of my head. So yeah. So there we go, guys. Mark's mentioning The Black Swan by Taleb, and if you are a crypto enthusiast or a Bitcoiner, you might cringe at his name. But honestly, guys, he's posted a lot of really intelligent stuff. He's not an idiot. And time may tell that maybe he's right. I know when you're deep in the thick of it and you know, in your echo chambers, that it's hard to be okay with it and everything. But the reality of it is, again, guys, Bitcoin has only been around during a secular bull market. It's never been through a depression or even a recession. And so there's a lot of what ifs, a lot of questions that still need to be answered. And for as much as you say all these people are getting involved, the reality of it is all these people get involved in the hype other new things as well, and oftentimes they're wrong. Historically, they're not always right. They do lose money. But they're going to try and get in because if they're right, they can be really, really right. If they're wrong, they'll lose money and they'll move on, right? So, yeah. Just some thoughts about that, guys, when you're looking at that. Oh, I got books coming, Oscar. I got books coming, buddy. Don't worry. I do have some books coming on socioeconomic theory, Elliott Wave, cycles, stuff like that as well. I'll be talking to you all about those in a few weeks here. I'll be adding them to the giveaway. Yeah, I've like what I have is just the beginning right here. I've got, like I said, those books and stuff there as well with it too. And I'm glad to see that you're excited about stuff like that. Seriously, because it makes me feel better about offering it out there to do that. But again, guys, we've got lots of things I'm launching here over this next few months here in Q4. Lots of different things for you, just as traders, some free, some paid, but just really just expanding what we do. And I hope it really resonates with everybody. Multiples of these things are things that I've been wanting to do for years now. And so finally able to get them going. So very excited about it. Let's see here. But anyway, so yeah, I think it's a great place to leave this here, guys. When it comes to investing and trading, don't get caught up in any one person's view without doing some serious research into it and making sure that you're not just being emotionally attached to whatever it is that they're saying. That's mine as well, guys. I've continued to say this since day one. Don't just believe me because I'm out here saying it. No, I believe in what I say. I have a lot of reasons to, and I continue to outline it for you guys. But you should never blindly believe anybody, especially when it comes to a subject matter of which you are not an expert or you don't have a lot of experience in. Because at the end of the day, you are the one making your trades. It's all on you. And you either get to claim all the glory of doing a good trade, or you get to suffer your own wrath of not doing so well on a trade. But it is imperative that you're constantly trying to learn about the market, because the market does change, guys. The market that we are facing today is not the same market that we had in 2008, 2000, 1991 or 2, 1987, 1976, 1964, 1929. These are all different markets. And they've sprung out of what's happened previously. So if you're the type of person who becomes very to where you become very withdrawn into whatever your view may be, not just in the markets, but just in life and whatever, it can cause you a lot of trouble as a trader. Okay? So be sure that you understand that the biggest advice I can give you guys as far as trading goes, just general advice, is understand that risk management is where you make your money. Learn how to do it properly and then do it daily. Okay? Anytime you trade, do it. Don't just say, I'm not going to do it this one time. Always use it, okay? And then 2 is to be fluid. Be open. Don't be so full of yourself, especially the newer you are, that you're unwilling to listen and try to understand thoughts and different views that may not be yours. If you can do those 2 things, guys, the rest of this, Elliott Wave, Wyckoff, supply and demand, indicators, all this stuff, guys, they're easy to learn. You can do that. But if you don't do those other first 2 things, you're going to have a heck of a lot of time overall trying to be profitable as a trader. I hope that makes sense, guys. Okay? So anyway, guys, there you go. Like I said, join us over at howtotradewin.com. We'd love to have you there. Check out the newsletter, the weekly newsletter there. It comes out every Monday. Well, it'll be Monday morning in the U.S. I guess it's probably Monday afternoon or so in the U.K. and then probably Monday evening in Asia. But that'll be coming out weekly there with macro explanations and ideas. And I just going to try and help you guys really wrap your heads around what's going on and what may be resulting from it in the best way possible that I can do that. So be sure you sign up for it. It's called The Market Breakdown. And other than that, follow me, guys. Follow me everywhere. We finally got our Facebook page back. I made a couple of posts yesterday, so that was awesome. We've got our Instagram back as well. Facebook taketh, and then they make you fight to get it back. Facebook still won't let me run advertisements because cryptocurrency. I just don't get it. But what it is. But I did get the pages back, so we will start posting on those as well. Subscribe to our YouTube channel here. Subscribe to our Twitch channel. And keep paying attention, guys, because we've got so much stuff coming out for you over the next few months, all right? I'll be back on Friday at 11 a.m. Central Standard Time to do this again. Hopefully, I'll see you guys there. Until then, trade safe. And as I say, remember the only thing you control in the market is how much you lose. All right? Take care, everybody.